Hi, welcome to Random Rogers Big Picture for the week of March 25th. Two things on the agenda. One fast item would be a little bit of an announcement at the end of the video, and then more importantly, talking about selling a stock. During the week I made a reference to core holdings and best of breed and things like that. Beginning of the week, I sold a stock that was a core holding. It was, I haven't used this phrase in a while on the blog, not going to sell it until there's death blow news type of holding. And I sold it. It was Ameren, AEE is a utility. Had it for a long time. It's done very little, but paid out a great yield, and it's gone up slowly over time. It had a couple of very ominous sounding news things. The stock started rolling over even before the news came out. I was probably should have sold it earlier, but it could be worse to sell it later. There's all sorts of open-ended things, which is the exact point of talking about it now. So they had two news items, and in sorting through the issue, and you can look under the headlines if you want, one had to do with their debt rating and one had to do with possible collusion. You can read this, and my gut feeling is that chances are the company's going to survive intact, and once this little blip is over, and the stock really didn't go down in any sort of catastrophic manner by any means, but that once this is over, it probably works itself out. But I could be wrong about that, and so because I could be wrong, I decided to sell. There's kind of an extra element of risk, and now that risk creates an extra element of volatility, which is not something that I want within the utility sector. So a month from now, or 6 months from now, or whatever, the sale will either look bad or it will look good, or I suppose it could be a push. It just sort of depends. But there's no way to know for sure. What I do know is that for the time being, there is elevated risk in a sector that I typically don't take risk for most clients. I replaced it, depending on the client, with either an ETF or a combination of about 2/3 ETF, 1/3 common stock. And again, that just is depending on the client. But kind of trying to look ahead, the stock, I sold it in the around 48.61, I think was the number, in the 48.60s, whatever. The stock came back a little bit from there. The all-time high, or the recent high, was, I believe, in the close to 55. So, it's about a 15% drop from its high for what started out as a 2% holding. So, it's not really a death blow by any means, but it's a way of avoiding trouble before it happens in any kind of real way. And as I say, I have no idea if this will turn out to have been the right trade or not, but I do know that I did reduce the risk taken in what I want to be a boring sector. So that's kind of the logic behind it, and we'll just see what happens. The 15% decline in the name, relative to the portfolio, is candidly not something I'm going to worry about. Again, this isn't the thing of weighting things at 2% and 3%. You can afford to not panic out. I certainly didn't panic out. Well, maybe I did. I'll take that back. But the consequence, I'm actually a little bit ahead of the market, and I'll have details on where I stand year to date next week when the quarter ends. But I'm, a little bit ahead of the market, that stock notwithstanding. So there you have it. One last thing is an announcement. I gotta say, I don't know what I'm going to be doing, but I'm booked on the show Fast Money to do the face-to-face thing. I don't know if I'm supposed to ask them about a stock, because I don't know what I would do there, or if they're going to ask me about ETFs. That, generally speaking, I think they know about my writing and know about the blog and some of the other stuff. So I don't think I'd be asking them for their opinion on Pepsi or what have you. But it could be fun. The Red Sox fan in me is ever mindful of the fact that it may fall through, but we'll see. We'll see if it happens. But in the meantime, have a great weekend. Enjoy the basketball.